Welcome back everyone, this is Forex in 5 minutes by Limitless Forex Academy. In this video we're going to talk about the one simple trick that you can use. It's very easy and it's going to be how you're going to avoid fake outs, and it's specific to market structure trading, but you can add it into your other strategies if you do. But it's what separates us market structure traders from supply and demand or support and resistance traders. People who use levels more, it's going to separate us who use structure over those. So what we do really is we're just going to start here with a simple support and resistance line where we have this low here. So we notice that price is pushing down here. We have price forming this low. It's tapped this level twice. Now, when we see this here, this push down, this for a level trader, so it could be support and resistance, supply and demand, someone who, as I said, uses specific just levels to trade, this would be a break because we've broken the level. But as a market structure trader, this is not a break of structure. And the reason for that is because the wicks have not broken. So when we're talking about structure breaks, we want to see price close beyond the wicks as well. The candle body of the break has to close beyond all the wicks of the structural lows. That is how we're going to consider it a break. Because the problem is when you see price breakout or breakout past the level but not actually break structure, this is prime fake out territory. So what will happen a lot of times is that people that trade just levels will see this, see price has broken out, they'll either enter on the breakout or they'll look to enter on a retest. But what actually happens is quite often with these, price is faked out, price is not ready. People may see this as a retest, look to take the trade. Price has not broken structure, we're in this region, and because of that, they would then lose their trade. Price pull back up, they'd lose their trade. This is premium fake out territory. But as a market structure trader, we can actually use this to our advantage because we know that this is not then broken out. It's actually faked out. So when price breaks back in, we could even look for a retest to go long. And as you see, what actually happens here is that price does form its higher low and then push up. Now, that's not to say I would have taken this specific trade, but it's just to educate you and to spot an example of when this happens. Now, as I said, the key here is that you must have price breaking the wicks and closing the body of the candle that breaks out must close beyond the wicks as well. So if you wanted to, you can use that with, or you can signify that with a zone, things like that. I don't personally like that. I prefer to just look to see if the wicks are broken, but some people may want to use a zone. And what you actually see here is that then price has not broken the wicks. And the reason that using this tip is so important is think of the psychology behind what you're seeing on the chart. So when we get to this point, yes, price has broken below this level, but these wicks are here to show us that price in these sessions, bears, attempted to push down and then exhausted up. So both here on this low and here on this low, bears attempted to push down, exhausted, they became weak, and then they pulled back up again. So this whole region where the wicks are, anywhere where price closes in this region, this is where we know that previously and recently, because these are fresh tested levels, recently in these regions, bears have exhausted. So we know that if we're looking to sell within that, this is an area where bears exhausted very recently. So why would we then sell into that? If we know that bears historically and recently historically have then failed to get through this region and exhausted, why would we then sell when we're in that? It's far safer to wait for price to show us that bears this time do have the strength to break through, and then we look for our entry. So this is going to be really key if you add this into your trading with any type of plan to avoiding fake outs and actually making fake outs more your friend compared to some sort of enemy. So use this tip in your trading. It's very useful, and this is why understanding structure is so important, because it helps you understand how the market actually moves. Thank you very much for watching. If this has been useful, subscribe, and I'll see you in the next video.